All right. Welcome back. This is the second video. The first is okay. No sound, basically. Or apparently, that's what I've been told. It was very hard to hear my voice. So I'm thinking that this time, I'll do my best. We'll try again, and we'll see if we can get something decent put together. All right, so once again, we're dealing with MNQ. That's Mary, Nancy, Quentin, which is a futures ticker, and it's the micro account for the NASDAQ futures. All right, so what do we got? We're back right in the beginning. We're dealing with price. We've got in blue underneath it volume, and then on the right hand side there we have a Fibonacci for daily. Since this is a daily chart, we got daily Fibonacci up. So let's build the chart so we have something decent to look at. First thing we want to do is we want to deal with price. We'll see if we can do some work on price here and see what we get. So we pull up Edit Studies, and I've got all sorts of stuff asleep right now, or hidden, whatever you want to call it. The first thing I want to look at, that I always want to look at, is the auto channel. And we want to turn that on, and then apply. There we go. What is it showing us? It's showing us for a year daily chart, MNQ is going up, except not right now. It's going down, or it has been at least. So, and look at the Fibonacci's here. We just hit the 200% Fibonacci. So we're getting a little bit of a bounce. We'll see how much of a bounce. My guess, probably up around the lower channel. Hit that, come back down. We hit a higher low, we go much higher. So what else we got in the old toolbox? So we put on the auto channel. Next thing I want to look at is a moving average, an exponential moving average. And in this case, the 233, which is a fib number, as opposed to the 200, which everybody's always talking about. I don't care about 200. I care about a 233. And what does it show us? It shows us basically what we knew already. Price is in a long-term move to the upside. Except that now, price broke down underneath the 233 and failed to even get up to the 233 to test it on the underside. And it sold off. Why? Because it formed a lower high here. Lower highs sell off hard. And that's exactly what it did. It sold off hard. Okay. Let's go and see. Pull up the toolbox once again. We'll see if there's anything else here. How about right on price itself? We'll put what's called the adaptive trend flow. And we're going to apply that. All right. It looks kind of busy on a year daily chart. I mean, it's showing us what we need to see. Right now it's showing us it's still in a healthy downtrend. You got all this red going on. So let's tighten things up a little bit. Let's go from the year daily. We'll go down to a 1 quarter daily or a 3-month daily. So just go up here and adjust the time to 3M 1D. Bam. That pulls up a 3-month chart. 3 months worth of data in daily bars or daily candles. And we're in a downtrend for the 3-month period. You see the channel pointing to the downside. And the Fibonacci's jump out a little more. What are the Fibonacci's showing? Well, on the retrace, it came down past 100%. and got all the way down to 200% and got a little bit of a bounce yesterday as opposed to a hard sell-off off of the lower high. Well, what did it also do? You've got the mean here in the middle. You've got one standard deviation out from the mean. Then you have two standard deviations out from the mean. And then way out, you got three standard deviations, or like more than 98% of what could be a total move. Even though it can go much more if it wants to, it generally doesn't. So this is like the warning track when it gets out on the red. And that's what happened down here. It sold up hard into the red, and then actually sold past the red. So this was screaming, turn around, turn around, turn around. And that's sure enough what it did. So that's the adaptive trend flow. Let's go back into the tricks here, see what else we got. Let's see what I want to see here. Maybe we'll just leave it with what we have up there, not get overly busy. These other ones I can plug in at any time. I'm just not choosing to do it at the moment because I want to basically work with the tools that we have, see if we can come up with a good plan. All right, let's apply that. Say okay. Maybe we don't want 3-month either. Maybe the candle's a little bit too big. Because what I really want to see is, I want to see a line. But it's a line made up of candles. But we're going to see that on the volume profile. So maybe I'll leave this alone as is. I'll come up. And I'll call this a grid, even though it isn't a grid. It's just one chart. Grid tend to have more than one chart, although they don't have to. We're going to save this. I'm going to save it as daily. Save. Okay. All right, that's good. So we built our first chart. Looks pretty good. It's nice to have pre-made studies to work with so you can quickly get what you want. It took a lot longer than that over time, I'll tell you that much. But anyway, so we got daily fibs applied, daily Fibonacci's applied to a 3-month daily chart, and it's showing the adaptive trend flow with the standard deviations, and it's showing a little bit of candle coloring. It's not perfect. I mean, you go from being on the underside to being over the top, but then it sells off here. These three candles should be red if it was perfect, but it's not perfect. You got to deal with an imperfect world. So we just take what we got here. All right. So let me see if we can go back to square one here for a second. Just take yourself a break if you want to get a bite to eat or something to drink or whatever. I'll be here, basically sweeping up, cleaning up after the joint. Just come back to the beginning, which is what? Just a basic price chart. Except this time, we're going to build up, not a daily, we're going to build up a 5-day, 5-minute chart. We go up here to the time frame, and we got one predefined already. All right. So what is this showing us? It's showing us basically a downtrend. It's also showing us not quite what I'm talking about in terms of a line, but it's more than enough to kind of get the overall feeling, if you get my drift. And then we got the mobile, not the mobile, I'm sorry, the volume underneath price. Okay. So I'm going to throw in some additional studies. We'll put the auto channel back. first thing we always do, want to get that sense of trend right away. We're going to put the EMAs back, and in this case just the 233, nothing else, and we're going to put the adaptive trend flow back. And then we'll have the chart that we had before. What am I missing? We got the EMA, we got the adaptive trend flow, with the auto channel. Okay, that's good. For a 5-day, 5-minute, coming down hard. So a big gap down yesterday morning, and then it rallied the rest of the day. So it's trying to turn around a little bit. Will it turn around? Well, stay tuned. We're going to find out. And let's see. Let's go back up to the studies. And this time we're gonna look at some lower studies. First thing I want to look at is volume. Volume and price go together like peanut butter and jelly. And we're going to apply that. And here we go. Now, given the fact that the candles are small, it's a little more difficult to read the volume for our purposes. So what I'm going to do, just for a moment, is I'm going to come here and I'm going to focus on the last 2 days out of the 5-day chart. Now we make the candles a little bit bigger. Not like big like they were on the 3-month daily, but big enough for what we need. Coming back to yesterday, the gap down, huge volume on the gap down. Could be some people freaking out, wanting to get out. They couldn't stand the pain of coming down, hard like it did. So they got out. Other people got stops tripped, basically building up liquidity. So, but what did it do? It gapped down outside of the channel, outside of the standard deviations. I mean, this is prime for a reversal. You just had to be patient, that's all. A lot of selling going on. Selling pressure, 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 pressure. Russia, 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 pressure, pressure, pressure. A lot of selling going on. And then you got buying coming back to counter it. But you knew you were going further down. Why? Because you didn't exceed the previous volume. And that's what it did. Retraced just a little bit, then it came down again. And this time it came down past the low of the opening bar or candle. And then what did it do? Little turnaround here. Got just a little tail. And it dipped down the furthest that it's going to go for today. Now we know that because we're seeing the price rise the rest of the day. So I have to be fair enough to say, at this juncture, didn't necessarily know that this was the point that it was going to turn. And if I zero in, okay, and we look at the right side, the hardest part to deal with is the right side because you don't know what's coming. You just basically have a situation here where it's affected a little bit of a turn and it's come back into, the next standard deviation, going beyond the 3 standard deviations to 3 standard deviations to 2 standard deviations, and almost all buying. Out of the total volume, which is the blue here, is the total volume of which the selling, the red, represents the selling. And the remainder of the blue represents the buying because it's buying plus selling. That equals the total volume. Okay. As far as the averages go, average volume that is, the red is the average selling, the green is the average buying. Pressure, pressure, pressure. But what do you have? You have the red, or the selling, exceeding the green. So that's making for general overall downtrend as it stands right now. So if we increment one candle or bar, and this doesn't do that, so I got to come down here to the little tiny arrows down here. See if I can do one bar. comes. Let's see, let's try again. Hit the wrong one. There we go. Now that's interesting. Why is that interesting? Because that's a little shooting star kind of deal on it. This leg up, meaning what? It pushed higher, it was looking to go higher, and then the sellers pushed it back down. They sold it back off, brought it back in. So the question becomes, what's the next step? Is price going up or is price going down? It's making progress to the upside. This could be just some temporary selling and then it pushes further on. So we look down at volume and what do we see? We see there's more selling going on than buying. And that's kind of what this is saying right here. So we go to the next candle. And the question becomes, what is going to become the next candle? Is it going up or is it going down? I think it's going up. I'll put my reputation on the line here. Oh, just barely. A little more buying came in. As you can notice, the selling dropped off a little bit and the buying kicked in a little bit. And the green line, the average buying, rose. And the average selling is kind of leveling off a little bit. So what are we going to do here? We going up or we going down? Going up, going down. Wish I had a way for the home audience to tune in and give me an idea, but I'll take the chance myself. And I'll say going down. Oh, I lost money. Oh, that hurts. That hurts. But that's okay because it furthers our premise of what? Selling going down, going down. Buying coming in. Buying came off a little bit. The total volume's a little off a little bit. But what happened? The average buying crossed over the average selling. And the average selling came down hard. So that's why the buying took off. We'll do one more candle. We can't do this for the whole chart. So what do we got? We got the makings of a nice little uptrend here. But you know what? It's got a long way to go before it fills in this gap. So what do we got? What do we got? What do we got? Are we going up? Are we going down? I'm going to say it's working its way back towards the mean. It did a little mean reversion here from being way out to back in towards the middle. Let's see if we can touch the middle here. So we'll say we'll go up. Oh, doji. Didn't quite make it. Tried. Nice effort. The volume's just a little bit less overall than the previous bar or candle. The selling came in just a little bit more, but the buyers exceeded the sellers. So you had a little bit favorable upside move, but it's really momentum-wise, it's running out of gas. And that, my friends, brings me to momentum, brings us to the next indicator that we're going to put on the chart. So we got volume. Next, we want to anchor momentum. Lazy bears anchor momentum. All right. So let's see if we can auto arrange here. There we go. So we'll crush the price chart a little bit so we got a little bit more room on the indicators. We got the volume that we've been working with. But now we have anchored momentum. And I like this indicator. So let's just deal with today. We can go back through history, but we want to deal with the front end. And what do we have? We have the red line is the fast line, for lack of a better way of describing it. The green line is the slow line. And then the histogram is essentially a reflection of the green line and the red line in terms of who is over who. All right, I won't get into the mechanics of the histogram at the moment. We don't need to. We're just going to look at the relationship of the the fast line and the slow line, and the fact that they're both beneath the 0 line. So this is an indicator that fluctuates around 0. It can go over 0, it could go under 0. All right. On the open, which we knew, gap down big time, substantial selling volume. The fast line plunged, and the green line didn't keep up. But that's fine, because that's going to show the turn. All right, so we're down, staying down on the red line, the fast line. And when we have price coming down, we actually have a little bit of divergence, I think. We got a low here, we got a lower low here. We got a low here, we barely got a higher low here, and off it went. And that's pretty much what it's showing price doing, what the red line's doing, which is moving to the upside. If it really pounded its way, it can make its way over the 0 line, then the whole dynamic changes. But everything's underneath the 0 line, so it's kind of weak. We got a crossover. The fast line crossed over the green line, or the slow line, I should say. Fast line over the slow line, which is this, almost like a little pause. You know, which way is it going to go? Well, the red line is going to continue moving to the upside, and the green line is continuing moving to the downside. So that's going to move you higher up. And then we hit the doji, okay? And doji-wise, the red line is losing a little bit of momentum, and all of a sudden the green line is gaining a little momentum. So it's balancing out. Where does it go from here? Okay, we got 2 candles squirt down. So we get a little bit more of advance notice, but you're selling off a little bit more again. And what do you got? You got the green line, the slow line, still moving upward, which says that this isn't over going up. It's just a temporary little, and that's what the red line of the fast line is showing. It's a temporary little sell right here. Sold off a little bit. And it's still over the green line, still over the slow line. The fast line's over the slow line. Let's get a couple more candles. There we go. Big move on volume. Okay, lots of buying going in right here. So shallow sell-off or retrace to a solid move. Now, the thing is that when you have a down, this is Wyckoff or volume. I can't think of the terms off the top of my head. I'll think about it and then I'll tell you. But more importantly, you got a big bar to the downside. This is actually strength, as crazy as that sounds. It sold off a little bit more, but then it started moving strong to the upside. And then you had a retrace that didn't come way back down and break the previous low, which is here. So this is a higher low. This is constituting a higher low, and then off it goes. Buyers come in. And what happens? The green line still moving to the upside. The red line pulled away because of the influx of buyers. Didn't cross, so it's still all good going to the upside. We got a couple more candles. There we go. Now when you get a move to the upside like this on volume, it's actually a little bit of weakness. As crazy as that sounds. Where this is a little bit of strength, this is a little bit of weakness. And it's selling off a little bit. So we'll see what the next bar brings us. Next 2. We got another little doji here. I don't know what you call those. Is a term for that particular doji. I gotta start writing stuff down, I guess. And we got another solid buying bar here. Not crazy volume, so basically it's in good shape. From volume standpoint down here, we've got buying going on. So even though this is a doji, which is indecision, this is looking more like the buyers are in control than the sellers. You got a little bit of a crossover on the moving averages, not the moving averages, the average buying and selling. And the selling is crossing to the downside, while the buying obviously is crossing to the upside. So we'll see if that means we're headed higher, which I think we are. Why do I think that? The momentum slow line continues up, and the momentum fast line basically continues up as well. All right, so that's basically that. We can add one more facet. You can't add too many indicators to the bottom or the lower portion of the chart, because then you can't really see anything what you really need. I mean, just the two, the volume and the momentum, is pretty good by itself, but I added just one more because I happen to really like the indicator. And this one is thanks to A. Jordan 930. It's called the inverted VIX. Turn it on. Gonna apply it. Gonna balance out the charts. Auto arrange. All right. Now we have a little bit of a problem, unfortunately, with the inverted VIX here. What's the problem? You've got basically an inverted VIX in its entirety here, but it comes to the end of the day yesterday, and then the start, or I should say 2 days ago, and then the start of today, it doesn't start drawing everything at once. Now I'm gonna expose the rest of the chart just so we can see that the inverted VIX comes back on, but it takes 2 hours of drawing to basically start the inverted VIX displaying what it should. So that's really what's going on. But I like it so much that I work with it. Before I get what I need out of the inverted VIX, I work with the momentum, and I work with the volume, and I work with price itself. But now that I have the inverted VIX, I have the indicators that I like to have to see if we can figure out what's really going on. Excuse me. So I'm not going to go candle by candle. I'm just going to quickly pull up today, or yesterday, I'm sorry, and see what we got. Now once again, at 4 o'clock, the inverted VIX is done. That's okay, because since 11 o'clock, we have an inverted VIX, which is doing everything that we need to do, which is what? The gold or the yellow line is the VIX, or the inverted VIX, I'm sorry. It's actually the reverse of the VIX. And what is the VIX? The VIX is the fear gauge. It's basically option contracts on the SPX, which is the S&P 500 index. And it's reflective of whether or not investors, traders, whomever, are afraid or they're confident. I guess that's the way I'm going to put it for now. Anyway, so that's the gold or the yellow line. Then the cyan line, the light blue line, that's an average. And I believe it's an average of the inverted VIX itself. So you can see when the VIX is over, or the inverted VIX is over the average of the inverted VIX, you get a move to the upside. Then you have a red dash line above and a green dash line below. And what is that? That's the Bollinger Band, or volatility of the inverted VIX. So when the yellow line exceeds the top Bollinger Band, that's a good point to get out of a move to the upside. Maybe it's not quite the I should take that back. I mean, that's the solid move here. Then you get, I'm looking up on price if you see where I am. Then you get another doji or shooting star saying, okay, that was the first wave, or the real strength in the move. Then we get subsequent moves because of that strength, moving to the upside. And you have the whole time, you have the inverted VIX over the moving average VIX, or inverted VIX. And you have it towards the upper Bollinger Band, indicating strength. And that's pretty much what's moving to the upside strong. The momentum, once again, it's got good momentum. It's moving to the upside. The green line is over the red line terms of the average buying is over the average selling. And what do you get? You get price appreciation. It's moving up. Okay. So what else do I want to touch on here? Well, just take a moment for yourself while I collect my thoughts. I think I've covered everything. I'm not going to go into another hour-long diatribe. You know, I touched on a lot of stuff yesterday. I don't want to just rehash today. But I did want to touch on facets of the market dynamics or the chart dynamics to give you a better idea of where I think things are going. And I think where they're going is we gap down. Did we fill the gap here? We did. We filled the gap. Gap down, brought all the way down, came back up to about here, and we come back over this way towards the left side of the chart where the gap started and where we are there, which price-wise is about 19,405. And we come over here, and it's right around 19,405. It filled the gap. So that's saying something. So now we zoom back out. A little lag there. And we get the 5-minute chart, and the channel is telling us we're going down. But price is going to hammer away at the top of the channel and start hammering it to go in the direction up, if that's what's going to happen. Or it's going to hit the top of the channel and it's going to sell off again. So that's what we're going to wait and see today. What's going to happen? We going to be April Fools, or are we going to be looking cool? You're going to be an April Fool, or you're going to be real cool? So what else? That's it for today. Unless we get into the Fibonacci, what am I saying? We didn't even touch the volume profile. I spent so much on just the traditional technical analysis. We got to do that. So what are we going to do? We're going to come back up. We're going to strip the chart. I'm going to leave the auto channel on. I'm going to leave the exponential moving averages on, but we're going to take the trend flow off. And then we're going to come down, and we get the buying and selling going on for the interest of the volume profile. We don't need the other volume. We could use it, have them work off of each other, but we're just going to focus on volume profile. So I'm taking every bit of the lower studies off. All right. Now, I'll even take the background volume off. So just hang in there for a sec. And what else do I want to do? I'm going to come down, and I think I'm going to get rid of, yes, I got rid of the fibs. So now all we have is pure price, the overall channel, and the EMA, or the exponential moving average. 233, try it out. 200, everybody talks about 200, 200, 200. No, no. I say no. I say 233. It's a fib number, and it's much better. But that's me. Let's see. Let's see. I think we've got to dig into the toolbox for the volume profile. So let's... And this is thanks to Snoopy Doopy. Snoopy Doopy came up with this, working with his friend Claude, working with an AI to put an indicator together, which I think is really cool. AI are going to take over, but in the meantime, we'll do indicators. All right, that's the first problem. This is basically, this is a volume profile, but it's for the whole chart, and I just want it for the day, for each day. So I'm going to see if I can manipulate this thing on the fly, and we're going to get what we need to look at. So we got all the options here. Time per profile, it says day. to step down to hour for a minute. Just see if we're going to show the point of control. We don't want to show the value area. Then we want to show the volume histogram. It says show naked only. We'll go with that for the moment just to see what we get. Oh, no, no, no. All right, what's wrong now? Well, I'm monkeying around here a little bit trying to figure it out. I'm not looking, I'm not seeing something that I need to see. I'm just trying to experiment to see if I can somehow get. It's doing the whole darn chart for some reason. I was a little excited to show you. I'm going to have to cut this short, and I'm going to have to figure it out for tomorrow. So I'm going to leave you in total suspense. But in the meantime, you can take what we did go over, if you wanted to, and basically try things out for yourself. If you're on Use ThinkScript, I got to get you the link, the direct link. But you can basically just take all the tools that I'm showing you and put them on your chart yourself at home and see what you think. In the meantime, I'm embarrassed because I'm not prepared here. I'm not getting what I need. We got a whole chart here. I'm going to go back up to a daily for a second. Nope. Nope, nope, nope. Well, just, you know what, I can show you the basic premise. Am I going to be able to? Well, one thing is, on the other charts we were looking at, volume was coming from the bottom. And here volume's coming from the side. So this is volume over time, as opposed to volume for volume's sake. And what's it showing us? This green line, this thin green line, that's what's known as the point of control. And what it is it represents the highest volume on the chart. And what it shows you is, or what basically the point of control is, the area of the highest volume in the chart. It's also a place where when price moves away from the point of control, it comes back, so it acts like a magnet. And what did you do? You moved away from the point of control, and price came back to touch and basically revolve around the point of control until it moved away. Getting far away, it'll come back at some point. Or the point of control moves, because maybe up here all of a sudden becomes the most volume on the chart. Then you'd have the point of control moving up to that point. And where point of control might have been is down here with this area of high volume, until this area of high volume exceeded it, and then the point of control moved up. And in an uptrend, that's what you want to see. You want to see the point of control moving up. In a downtrend, the point of control is moving down. So it's just purely following volume, or volume as it evolves. Now there should be two other lines on here besides the point of control. There should be the high value node, which is probably somewhere around here, and the low volume node, which is somewhere around here. And then in between the low value node and the high value node is the value area, which I think I can actually paint in here. See if that works. We come down to show value area, and I say yes, I want to see the volume area, or the value area. There we go. So that's the value area. So that the top of the value area is the high value node. And the bottom of the value area is a low volume node. So where I was pointing to is not right. So I got to do research on that. I got to do my own homework. Make sure I'm saying the right thing, because I want to convey misinformation to people. But that's the value area. Let me get rid of that. Let's see now. Value area. Yes. I'll say no. Okay. Apply. And we're back. You know what? Go right into the ThinkScript itself and see if I can find. For some reason, just bear with me for a second while I look through the code, see if I can find the answer to why I'm getting the chart only, as opposed to getting things broken down between days. See, here's chart, minute, hour, day. So something missing that I'm not picking up on at the moment. Not too easy to sit here and try and record, and at the same time on another part of your brain trying to think of and debug a situation if something's not going exactly the way you need it to. So maybe what I'm going to do is zoom out. Yeah, that's frustrating. Okay, but that's a little bit of a mini introduction to the volume profile, which is part of what they call order flow. And there's lots of different facets to order flow, and not in the scope of this particular video. But Volume Pro is, so that's just a little bit of a taste of order flow. And before we know it, I said it's not going to be an hour long. It's not an hour long. It's 45 minutes long. So if you hung in there and you stayed for the whole thing, I thank you very much. And if you didn't hang in there, I understand. You can't spend all your time just looking at this video or a series of videos. But we're going to hone it in even more, because I don't want to spend a lot of time on successive updates. But I'm going to figure out the volume profile deal. Hopefully the audio is better this time. The last one, apparently the audio was a little sketchy, and I apologize for that. But I guess that's it. So whatever you're doing, I sure hope you're having a good day doing it. I sure hope you're having a positive trading day and you're making money. But I'll look forward to seeing you in the next one. And the next one I'll have my act together in terms of volume profile, I'll tell you that. And that's it. So let's wrap this up. Thanks again. Have a great day, and I'll see you in the next one. All right. Bye.